Hello and welcome to News Fatafat. Let's look at some of the stocks that are buzzing at this moment, or some of the stocks that are in focus. So IT stocks as a whole is doing well. Maybe for an exception of one or two companies, broadly things are looking good. Hindustan Copper, probably on the back of numbers, is up close to about 6.5–7%. Adani Green as a stock is also doing well. So we'll just pull up all of these names for you, and National Fertilizer as well. So these are 3–4 stocks or companies that one is focusing in on. But of course, IT as a sector is probably lending the hand today, and that's one of the key things to note. And it's not only the large cap IT that you can see on your screen, but it's also the mid cap names that are essentially doing quite well. Hindustan Copper on the back of numbers up close to about 6%. Let's look at National Fertilizer as well. Let's look at Adani Green as well. So these are broadly some of the stocks that are in focus. But banking as a sector, everybody is confused as to why it's underperforming, what is happening. Today, a very big report came in from Morgan Stanley. It's about 68 pages in terms of reports, and why do they like corporate banks? Let's go across to my colleague Varun now. He's been scanning through the report. Varun, what does Morgan Stanley say?
Basically, the Morgan Stanley note on private banks, you can just call it an advertisement for private banks. Basically, throughout this note, they're just citing numerous reasons why they like the private banks. In fact, they initiated coverage on IndusInd Bank and raised their target to 710 rupees per share in this note. Now, they believe the private banks are at an inflection point. Some of the reasons are post-capital raise, much better balance sheets than the PSU peers. So even if there's a lot of pain from COVID and we see a huge spike in NPAs, they believe that private banks have the necessary capital buffer to survive it. As a result of this, because other banks won't, they think that private banks are also going to eat a lot of market share going forward. So they actually think that post H1 of this year getting over, you're going to see all the private banks starting to grow again at 15 to 18%. Now that's from this note. Consolidation is going to help the growth and recovery only further. So that's on the market share front. On the asset quality front, we all know that the private banks are leading in terms of they have the lowest moratorium and they do have the most diversified loan book. They also have a higher retail share, which is an analysis we did today, and even the Morgan Stanley note talks about that. Finally, the valuations are just very cheap. It's a 40% discount currently to what the historical valuations have been on the private banks across the board, 10 to 40%. Obviously, HDFC, Kotak on the lower end, but banks like IndusInd, RBL, ICICI Bank, Axis Bank, huge discounts, 30, 40%, so they like that as well. So that's the note in a nutshell.
Thanks, Varun, so much for that. Of course, an interesting development globally has been what's happening at the Citigroup. It's an interesting change. So Wall Street's longest enduring glass ceiling is about to be broken. This is coming in at the Citigroup. The the third largest bank in the US said on Thursday that Jane Fraser will become their chief executive officer. This is in the month of February that you're looking at this change in terms of the CEO. Fraser, the bank's president and head of global consumer banking business, will succeed Mr. Corbat, who has served as the CEO since about 2012. Fraser was tied up with chief executive since 2012. She was tied up with the bank's next leader last year when she was promoted to her current role. China has approved for trials of its first nasal spray vaccine to combat the novel coronavirus that has claimed over 9 lakh lives and infected more than 27 million people globally. Official media here reported on Thursday. China's only nasal spray vaccine against the coronavirus is expected to start phase 1 clinical trials in November and is recruiting 100 volunteers. We at ET Now has been running a series of rebooting Bangalore. Let's just hear out a very, very special interaction that my colleague Chandra R. Srikanth had with Prestige Estates. Of course, it's a listed company. It's a company that needs no introduction. They have a lot of construction going in and around Bangalore. Let's hear out that interaction.
decided that we can't just be sitting back and we need to do something, because we've been working on these projects that we've launched for some time. And since the approval came, we said we may as well now go ahead and take that leap of faith and launch these projects. More so since after the lockdown, from June onwards, the business actually picked up. And it really picked up in the month of August, because even July we had a week of lockdown. But August has done well, June has done well, and the 3 weeks of July also have done well. So in all, it's been an overall a very good feeling for us here at Prestige. And of course, I think even others also in the city, other developers are also feeling the same thing, that residential properties now are picked up. There's a demand, people are committing themselves, people are buying. And they are not only buying properties which are the mid-income, many of them are even committing for luxury properties. Some are upgrading themselves to a larger unit. If they had a 2-bed, they are committing themselves for a larger unit, 3 or 4 bedroom. So all in all, there is activity, and it's a very positive sign. Now, this, I believe, is for 2 reasons. The first reason is that the interest rates are at the lowest as of now. So it's an opportunity. So this is what is helping create the demand. And second part is, people have started realizing that they need to actually commit themselves and create an asset for themselves. So they believe that, it's better to have one real estate assets which over a period of time can also grow in value, and there'll be something that they can, which is tangible, which they can hold on to rather than any other investment. And for the larger properties, luxury properties, as I said, people had the wherewithal, they had the money. Only thing they were holding back, but now with what has happened during COVID and the lockdowns, they believe that they need a larger space. If they've got a 4-bed, they're upgrading themselves to a villa, or they're going to an out-of-town property where there's a lot more open space, a lot more greenery, and much more less pollution. So these have happened, and I think these are positive signs. And that is what has given us the courage to do 3 launches. First, we launched the Goa project, which is the Prestige Ocean Crest, which has done very well. The demand has been fairly nice. And then we've got Prestige Primrose Hills. It's a product targeted towards those who are buying, first-time buyers for homes. They're all 2-bedroom, a single bed, and smaller units. So the budget itself, the overall ticket size, is between 25 to 50 lakhs. So I believe that that's also going to be a winner. And the location is good. It's close to a metro station. It's Road, Bangalore South. And then the last one which we launched was Prestige Waterford in Whitefield. And a lot of people living in Whitefield and surroundings, again, the question of upgrade, because the property will get ready in the next 3 years to 3.5 years. So they have, sort of committed themselves thinking that this will be a good upgrade for them.
Sure. Mr. Razak, in fact, interestingly, you're the second person in 2 weeks who's talking to us about a pickup in residential. Incidentally, we also spoke to Mr. J.C. Sharma Shobha last week, and he also said that the interest is certainly going up. So in that sense, is the recovery in Bangalore market swift compared to other markets in the country? What is driving it? Are these first-time buyers? Are they residents, or are they people who have perhaps come back from abroad during the pandemic and they are now perhaps looking to invest?
It's a mix of all, but I think it's a lot of people who are upgrading themselves. And like you rightly said, there could be a few NRIs, but not that many to move the market to that extent. But there are NRIs who are also committing themselves. So it's a mixed bag, and there could be a few first-time buyers also. So all in all, I think the overall situation in Bangalore is pretty positive, pretty good. And similarly, the same thing is happening in Hyderabad, because we have got quite a strong presence in Hyderabad. We are completing one very large project in Hyderabad, which we have now started handovers and deliveries, Prestige High Fields. But we are working on another project called Prestige Tranquil, which is in Kokapet. Now the plans are approved. We just have waiting for the RERA number. And my Hyderabad team tells me that there's a lot of interest for that project, and the moment we get the RERA number and launch it, we should be able to, mop in a fair amount of sales over there, because people have expressed their interest on it, and it's only a matter of time, because without RERA, we definitely can't sell.
That was an exclusive interaction with the management of Prestige Estates. On that note, we're taking a break. Coming back quickly, stay tuned. August saw the second straight month of mutual fund investors redeeming more than what they are investing via SIP or lump sum investments. On the Money Show today, Mubina Kapasi caught up with the PV Subramaniam of Subramoney.com, who said that a bout of redemption may be due to job losses that are happening across the board, but he strictly advises against treating mutual fund as an asset that should not be used to book profits for when markets rally. Let's listen in to this conversation.
Yeah, all these things are happening. One is, when a 53-year-old pilot loses his job, he's not sure whether he'll get it back. So maybe his retirement has already happened at 53 instead of 60. So some withdrawal will happen for him to meet his household expenses, and his ability to invest money is also reduced because he cannot put in money because he doesn't have a salary. Now, that is true for very many people.
What would be the pecking order according to you, Mr. Subramaniam, if I actually have to go in and, sort of liquidate my savings, assets, you mentioned Provident Fund, mutual funds, of course, we are seeing that phenomena. But of all my assets, is there a pecking order? Because if I look at Provident Fund, I think that, look, this is my nest egg. And then if I'm looking at mutual funds, I feel that, but I have to also invest in the long term. So how should one essentially sort of starve off this period of lull where, I'm jobless, but I still, of course, need to feed myself and my family?
Difficult thing to ever liquidate would be real estate, because you'll not be able to sell real estate during such a situation. So selling real estate is out. If you have old endowment policies of LIC, of even of a private sector companies which are now 20 years old, that would be the best, because there you're anyway going to get only 6 or 7% return at best. So best is to redeem that or take a loan against that you may be able to get at 8 or 9%. That would be the pecking order. But what happens is the easiest to withdraw is the mutual fund. At a click of a button, all those things which were told to people, इसमें कभी भी आ सकते हो, कभी भी जा सकते हो, no entry load, no exit load. So people are listening to all that, and now they are implementing. They're saying, oh, I need money here, at a click of a button, I can get it from a mutual fund. The easiest money to redeem is, of course, the mutual fund. So people are redeeming more from mutual fund than from insurance company. Provident fund, perhaps those people have already redeemed their mutual fund and therefore they're withdrawing from their provident fund. So these would be the reason. There's nothing. If you have equity shares, largely people sell whatever is doing well. So if they bought a share at 10 rupees, which is now at 20 rupees, they would sell that. But they bought another share at 10 rupees, which is at 8 rupees, they will not sell that. So like what Peter Lynch says, watering the weeds and plucking the flowers, people will do. They will sell their best shares and they will keep their badly performing shares.
Do you think?
Right, so 5 p.m. you can tune in to watch that particular interaction. Just meanwhile, as we were talking, there is a news flow regarding Cadila. One approval has come in. I think it's a complex injectable approval that we are talking about in terms of what's happening. But when we just talk about these pharma companies, the way the rally has happened, you just get a sense that maybe a lot of it is factored in. But let's focus and go ahead to the next story that we have. Bangalore headquarters GRU has raised about $30 million yesterday. YC Continuity, the growth stage investment fund of Y Coimbatore, led the round of this existing Sequoia right. Ribbit Capital, Propel Ventures participated in it as well. We spoke to the co-founder of the company. Let's hear out what he told us.
Over the last 5 months, we have been working 100% from home, and all the meetings and everything had to happen on either Zoom calls or on Google Hangout and so on. So it was a very different experience. What helped was existing relations with these set of investors that really kind of helped.
So did you start the fundraise exercise post-lockdown, and then did that do anything for your valuations, or were you in dialogue pre-lockdown and therefore that also then had an impact on valuations?
So we started fundraising post the lockdown. And the talks about valuations were independent about independent with respect to this pandemic and so on. The company has seen a great growth trajectory over the last 1 year since we raised B round. So, yeah, if that answers your question.
So what do you plan to do with all of this 220 crore rupees? I would imagine is to grow your business, but in which direction are you growing it? Are you planning more products, adding more services?
Yes, precisely. So we are going to invest further on the product. So today you can invest in mutual funds and stocks on Grow. We also launched gold, so people can also buy digital gold. We are in process of launching international equity. So investors would be able to buy stocks of companies like Amazon, Google directly from India, right? So that is already kind of in pipeline next couple of months. This is already kind of invite-only mode. The next two products that we are working on is we'll be launching derivatives. And on the other side of this spectrum of risks, we'll be launching fixed interest products, like bonds.
That was, of course, an exclusive introduction after the round of fundraising. On that note, completely out of time, taking a break. Stay tuned for last 90 minutes of the